Hi class, today we're going to do chapter 2, Cumulative Problem with ProConnect. Okay, I'm sharing my screen with you right now, and I've pulled up our ebook, chapter 2, Cumulative Software Problem using ProConnect. And so on this particular problem, they have the information that is available for Albert and Allison Gator. And they've given an updated W-2 form. Notice this one's been modified from chapter 1. So it's basically the same W-2 form, with the exception is that they've added this box 12A here for the employees, the employer's paid health insurance, or the health insurance that would go to the employee that the employer paid. They're going to tell you in the instructions for this chapter that there is health insurance that's going to be paid for this particular person, Albert Gator. Also, the company has paid parking fees for them that they've added to box 14. And these parking fees that they paid for the employee are considered to be income to the employee. And so that's why it's on the W-2 form. So the other part of the W-2 form, the wages and the federal income tax that was withheld, all of those stay the same. So we are continuing the problem from chapter 1. And so in addition to the interest that we added in chapter 1, we're going to need to add some more interest because Albert and Allison also received 3 Form 1099s. Form 1099s are for income that has to be reported because it is taxable for federal income tax purposes. So the information that you're going to add to what was already there begins with this first 1099 form. So I'm going to quickly switch over to ProConnect. I've already brought up the ProConnect from the last period. So I'm going to start from the beginning here. You should have a menu on the left-hand side of your screen. And so what I want to do is I don't want to do a welcome tour, but I have some saved returns, and I might want to view those returns. So what comes up on this screen is you got to make sure that it's still the 2019 return. You got to make sure that it's for the right client. And we're continuing with Albert Gator. So I'm just going to click on Albert Gator to pull up the Form 1040 that we've been working on. And so what comes up on the screen is the client information. We don't need to update any of the client information. We already recorded this client information from last chapter. So this is a continuation problem. So this is, we've already done in the last chapter. The same is true for the dependents. We do not need to update any dependent information. So basically, I'm going to scroll down here to where it starts with income, and I'm going to expand the menu for income. And when I click on income in the menu, it expands with these items. We don't need to enter any more wages, salaries, or tips. That was already entered in chapter 1, but we are going to need to add some interest income. You'll remember from your problem instructions that you had some interest income that you haven't recorded for the Florida Electric Company. So you're going to add this to the information that you already have. So I'm going to switch back to ProConnect, and I'm going to click on interest income. And what it's going to do is it's going to pull up this Visca Bank that we entered from chapter 1. The $338 was already there. In chapter 2, we're going to add the Florida Electric, I believe it was, and I'm going back to your instructions for just a minute. The Florida Electric Company is where we have incurred some interest income of $682.41. So we're going to enter this in our interest income in ProConnect. We enter the company name here, Florida Electric Company. That 1099 form in the instructions was addressed to Albert Gator. So because it's Albert Gator's interest, we're going to show that that was the taxpayer that we had originally set up as Albert Gator. It wasn't his spouse's 1099 form. The amount of the interest was $682. You just key that in. That's $682. And that's the interest income that's coming from the Florida Electric Company. And so this is just regular interest income that is taxable. So going back to our problem instructions, this was entered in as interest income. Do you see here in the box it says it's interest income? It also says it out here. And this is a 1099 interest form that we're looking at here. And so this interest has to be put in as interest income. There are 3 1099 forms that they give you in this problem. So I'm going to the second 1099 form, and notice this one is the 1099 form for dividends. It also tells you there are dividends and distributions. And what you need to look for about dividends is whether it's as an ordinary dividend or whether it would be a qualified dividend. So you need to make the distinction as to what that is. An ordinary dividend is going to be taxed at the standard federal tax rate. If it's an ordinary dividend, we tax it at the federal tax rate. If it's a qualified dividend, then we're going to tax that according to the capital and capital gains tax rates. So it says in 1B that there's some qualified dividends. It also says there are ordinary dividends here. The third 1099 form is also for dividends. And the dividends for this is just ordinary dividends that we receive from the Grapefruit Mutual Fund. The ordinary dividends are $160. So what you have to do is you have to record both of these as dividends. Since they were from different companies, we've got to record the different companies in ProConnect. So we're going to start with Everglades Bank Corporation. I'm going to go back to ProConnect. I'm going to click on dividend income to get it expanded. And in the first block, I'm going to put the name of the payer who paid us the dividends. And that again was Everglades Bank Corporation. Again, I'm going to go back to this and I'm going to look at it. It was addressed to Allison Gator this time. Do you see the recipient's name here is the wife? So this is the wife's ordinary dividends and also qualified dividends that it's got here. You're going to put ordinary dividends in for her for Everglades Bank Corporation. So she was the spouse. We're going to mark this 2. And there were ordinary dividends. And the ordinary dividends were $1,031. Then we're going to move to qualified dividends. Going back to the instructions on the 1099 form, they also had qualified dividends here at $1,031. All right. This was dividends that were nothing to do with bonds. They were just qualified dividends and ordinary dividends. So if you look at the instructions here, this is ordinary, this is qualified. You got to put in the name of the company that paid you the dividends and who received it. This time it was Allison, the wife. We also need to put in Grapefruit Mutual Fund. So I'm going to go back to ProConnect. I'm going to put in Grapefruit. Grapefruit Mutual Fund. And this mutual fund for Grapefruit is an ordinary dividend, and it went to Allison Gator. So we're going to select 2 here. And we make sure you're in the ordinary dividend column. The amount is $160. So when you're entering dividend income, you want to look to see what kind of dividend income it is. If it's a qualified dividend, you put it in this column. If it's an ordinary dividend, you're going to put it in this column. If it has to do with bonds, you'd put it in this column. If it's tax exempt interest, you would need to know whether the bonds are municipal bonds, whether they're state bonds, and enter that in. So I'm going to go back to the instructions, and we put in the information for Grapefruit Mutual Fund. Now right here, they had some additional information. The Gators also received interest of $751 from bonds that were issued by the Miami-Dade County Airport Authority. They should have received a 1099 form, and they should have showed you this in Cengage, but they did not. But you still have to record the $751 in your tax return, and it is considered to be a dividend, excuse me, interest from the bonds. So I'm going to go back, and I'm going to put in this from the Miami-Dade County Airport. And so what you have to figure out is whether this bond interest is taxable or whether it's exempt from taxes. And the way you do that is you look to see who the bond was issued by. In this case, it's Miami-Dade County. That would be a local type of authority, and the bond is tax exempt. If it's a state bond, it's tax exempt. If it's a federal bond, you have to pay taxes on it. So what I'm going to do is I'm going to go back to ProConnect. This is a bond this time that we received from Miami-Dade Airport. And this time I'm going to choose, you could choose one or two because it was addressed to both. But we're going to scroll over, and this would be a bond. Notice this is US bonds, that's for your federal. And then tax exempt bonds, I would think that this would be a municipal bond. And so we would put in the amount for that, and make sure you're on the right line for that, or the right box, which is the third box here. It's where we're going to record it. And the amount of that is going to be $751. And it is, in this case, tax exempt. So I'm going to go back to the instruction problems and look at the next thing they have on your instructions. Albert went to the casino on his birthday and won big. as reflected on Form W2-G. This is the gambling winnings form. You have to pay taxes on gambling winnings. So you can see here that they had to report winnings of $6,022 as gambling winnings. So we're going to go back to ProConnect, and I'm going to look through my drop down box that's under income, and I'm going to look for gambling winnings. And he was gambling with the, I don't know how you say that name, but it's Resort and Gaming. And Albert was the gambler, not Allison. And the total amount was $6,022. Nice birthday present. Now let's check to see if he had any withholding on those gambling winnings. Okay, he had $1,600 in withholding on the gambling winnings. I don't see any other withholdings for this customer. Not customer, but this winner. All right, in the next part of the problem, it says Albert had no other gambling income or losses for the year. In February, Allison received $50,000 in life insurance proceeds from the death of her friend, Sharon. So Allison received $50,000 in life insurance. Life insurance is not taxable. So we move on to the next part. In July, Albert's uncle, Ivan, died and left him real estate, undeveloped land worth $72,000. This is not taxable because it's under a threshold amount for estate tax. And then it gets interesting. It says 5 years ago, Albert and Allison divorced. Albert married Iris, but the marriage did not work out and they divorced a year later. Under the July 1st, 2015 divorce decree, Albert pays Iris $11,500 per in alimony. All payments were on time in 2019, and Iris's Social Security number is this. And then 3 years ago, Albert and Allison were remarried. So he should have stayed married to Allison because now he has to pay alimony. Alimony is taxable to the recipient. It is also, reduces as an adjustment to income the amount of Albert and Alice's taxes. So it's going to reduce as an adjustment to income on the 1040, this alimony is. So we got to figure out a place to put the alimony of $11,500. Remember, we're doing our tax return for Albert, and he's paying $11,500 in alimony. So I'm going to go on to, it doesn't fit in this, what I've got up here, so I'm going to search for something else. Okay, it wouldn't go here because we're not receiving the alimony. We're making a payment, so it's got to go somewhere else. I don't see it here, so just bear with me. I know it's up here somewhere, so let's see if I can get off of this part here. It didn't do a thing to it, did it? Oh yeah, okay. It did, it changed this. There's alimony and other income. It doesn't really go there because he paid the income. So I'm going to click on adjustments to income. And right up here where you see less common scenarios, if you'll click on that, you can see there's where alimony paid is. They kind of had it hidden from you. So you have to know what alimony affects. And you remember I said earlier that it was an adjustment to income. So click on adjustment to income and click on less common scenarios, and it'll bring up alimony paid. And so we're going to record the taxpayer in here. First name is Albert. Let me get in the right box. And his last name is Gator. And then you got to put in the recipient's social security number. And that you're going to get from your instructions in the problem. So I'm going to go back to the instructions. The social security number for Iris, who is the recipient, is 667-349224. So I'm going back to Albert Gator. Oh, I'm sorry, I've got the wrong thing in here because that says recipient's first name. So that would be Iris. So let me make this correct. And let me see what her last name was. Well, we don't know what her last name is, but we do know her social security number. So I'm going to record that in the amount paid. And the amount paid was $11,500. And let me back up just a minute. I'm going to enter in the Social Security number. And this was Iris's Social Security number. And then I believe they told us the date of the agreement would be July 1st, 2015. And then I'm going to click OK here. All right, and then we're going to go back to our instructions. Coconut Fishing Charters Incorporated pays Albert's captain's license fees and membership dues to the Charter Fishermen's Association. During 2019, Coconut Fishing paid $1,300 for such dues and fees for Albert. This would be a part of itemized deductions if he does that, but we're not using itemized deductions right now because they told us to use the standard deduction, and you entered that in chapter 1, so it's already been entered in there. So move on to the next part. It says Allison was laid off from her job on January the 2nd, 2019. She received a Form 1099-G for government this time for unemployment benefits. So she applied for unemployment benefits. Unemployment benefits are taxable. So we got to find a place to put this taxable amount, and this is unemployment benefits. The unemployment benefits are a source of income. So we're going to go back to ProConnect, and we're going to look at income, and I'm going to expand it under general to get my income back up there, and I'm going to expand my income, and let me see if I can find unemployment is right here. Again, that's under income because unemployment earnings are considered income. And so you need to put down who paid the unemployment, which was the Florida Department of Econ Opportunity. And we'll look to see if they gave us an identification number. So you need to look at this closely and see if there was any state withholding. I don't see any. But this was in the state of Florida. And I was looking for an identification number. And that would be right here. So 21-555-6666. Okay, and the address was 107 East Jefferson Street. And the city was Tallahassee. Excuse me, sorry, class. The next thing is Florida. The next box is the zip code. Three two three 9 9. Total received 4,050. There's nothing in box 2, but there was some income tax of $155 that was withheld. This would be the tax year of 2019. And that's all I'm going to put in right there. That's everything that we have on this form. So we're going to move to the next form, our next part, which says Albert and his family are covered by employee-sponsored and employee-sponsored health plan at his work. Coconut pays $700 per month in premiums for Albert and his family. So if this is for a year, you would multiply 700 times 12 months, and that'll give you 8,400. And notice that's what was entered on the W-4 form right here. This DD just means the employer paid some health insurance, and that's where that information comes from. It also says during the year Allison was in the hospital for appendix surgery. The bill for the surgery was $10,100, of which the health insurance reimbursed Albert the full $10,100. So health insurance would not be taxable for Albert. Coconut Fishing also pays Albert's parking at the marina. The monthly cost is $120. So if you multiply it $120 times 12 months, it'll give you $1,440. If you look at your W-2 form, the parking was described in other at $1,440. It is considered to be income, but we don't know what to do with it yet. So I'm not going to do anything with it on this particular problem. Maybe in an upcoming problem. And so I believe that's all that we have for this. So I'm going to go back to ProConnect. Move myself out of the way here. And I'm going to have to move some things around so I can see. I know y'all probably can see, but I just can't see it. Okay. So I would go ahead and click check return. And it's updated the information for us. So I want to check these just to make sure that I haven't left anything out. The wages, remember, came from the W-2 form that was entered in Chapter 1, so we didn't have to do anything to that. For interest income, the amount was $1,020. For our dividend income, it was $1,191. The unemployment compensation was $4,050. And the other income was your gambling earnings. And so you had a total of $79,307 for the income. And that is correct. We also paid some alimony of $11,500, which would be deducted from our total income. And that was the total amount of our adjustments. So our adjusted gross income is $67,807. So we're correct so far. For your itemized deductions, they've just got 823 now. So your standard deduction's higher. So we're going to leave the standard deduction in right now because it's larger than the itemized. Your taxable income is $43,407. And your credits was $46,997, which is your tax before any credits. I'm sorry, this is your tax amount. And then you had one child that you could claim as the other dependent credit. That was $500. That was entered in Chapter 1. You have total credits of $500. And so the total tax so far would have been $4,197. And then we had some federal income tax that was withheld. It calculated that amount for us. Some of it was from Chapter 1 and some of it was from Chapter 2. And the amount of the refund is now $31.92. All right, so that looks correct to me. So I'm going to file the return. And instead of filing now, I'm going to, we're not going to file it yet. We're just going to add a watermark to it. And you're going to create your PDF. And I would download my return. And I would save that somewhere where you have it. And this gives you all the information that you just put in. And this was for your e-filing part that it automatically, ProConnect automatically does this for you. And then this is what the 1040 form's going to look like. It also completed Schedule 1 for you because you had some gambling winnings. And you had some unemployment compensation. The two of these are combined together. That's the total amount of the additional income, which would be entered on line 7A of your 1040. So this is going to match up with 7A on your 1040 right there. Also on this same additional Schedule 1, additional income, adjustments to income, we would have had the alimony that Albert had to pay and the Social Security number of Iris, who he paid it to. And so that $11,500 in alimony is going to end up on line 8A of 1040. Right there is where it goes. This is the checklist that's automatically created for you by ProConnect. And these are the federal worksheets that back up the information that you put in from the 1099 forms, your interest as well as your bond interest. These are the federal worksheets that are recorded. And that's it. So save your work so that you'll have it again next time, and we'll input the information for the next time on the next video. So I wanted to leave you with this 1040 form, as much of it that you can see. So you can see how this is done. All right, so I'm going to stop sharing and we'll see you again next time. Thanks. Bye-bye.